All right, welcome back to another National PSI Real Estate Exam Prep. And today let's talk about appraisals. And more specifically, let's go over 5 questions with their explanations as to why they are the answer. The listing or asking price of a property in the marketplace is its market value. Market value refers to the price at which a property should sell in an arm's length transaction between informed parties, neither of which are under undue pressure, with the property having been exposed to the market for a reasonable length of time. In contrast, intrinsic value is derived from a person's individual preferences for a particular geographic area over another less desirable areas. Subjective value is what an individual perceives the property's worth to be based on their benefits it offers to that person. Lastly, book value, which is used for income tax purposes, refers to the value of the property after accounting for its depreciation. Reconciliation is an appraisal term used to describe an appraiser's analysis weighing their findings. Reconciliation is the process used by the appraiser to determine how much weight should be given to each of the 3 approaches to value, if any. After considering all the data, the appraiser will estimate a final indication of value. It is important to note that reconciliation does not involve taking an average of the values derived from the different approaches. The purpose of an appraisal is to estimate the market value of a property. In an appraisal, the appraiser estimates the market value of the property. They do not determine the market price, which is the price for which the property actually sells. The market price may be higher or lower than the appraised value or estimated market value. Defined as a loss in value from any cause, depreciation is generally divided into 3 categories. The loss of value due to normal wear and tear is physical deterioration. Physical deterioration refers to the loss of value based on the physical wear and tear on a property and can be either curable or incurable. External and economic obsolescence are reductions in a property's value caused by factors external to the property itself. Functional obsolescence is a loss in value due to an outmoded or unacceptable feature of the property. A homeowner builds a 5-bedroom home with a tennis court in a neighborhood with smaller homes with no tennis courts. The value of the 5-bedroom house would most likely be affected by conformity. Under the principle of conformity, regression states that a larger, more lavish home with a pool would tend to be valued in the same range as the smaller homes in the area. Conversely, the principle of progression indicates that the value of smaller homes would increase if they are located among more expensive properties. The principle of substitution states that a property offering the same attributes for the least amount will sell first. Finally, the principle of contribution determines the value that improvements bring to a property. All right, this was 5 questions with their explanations as to why they are the answer. If this was helpful, give us a thumbs up and subscribe because we drop a new video every week to help you pass your National PSI Real Estate Exam.